Hi, this is Stan Muse from Enterprise Systems Performance. Today I'll be introducing a tool which I've developed over the past few years called Trading Stripes. It's a day trading tool to see price action movement over very short terms to make trading decisions. Before we begin, you should open your browser to full screen as some of the visuals may be small. Before we begin, let's review the terms of use. Stan Muse is not a registered advisor and I do not give investment advice. These slides are intended for educational purposes only. Do not trade from them. There is a risk of loss in trading and investing of any kind. No trading results are guaranteed or implied herein, and you are responsible solely for any losses incurred from use or application of any part of this presentation. If you do not agree with this, please end the presentation now. And I recommend that you consult with a qualified investment advisor before making any trading decisions. So what are trading stripes? They're really just a graphical overlay on your stock trading chart and a methodology for short-term stock trading. They're meant for day trading or very short-term swing trading only. They are applied to a 1-minute live or delayed stock price chart for price movement orientation and to assist with buy-sell decisions. They're not necessarily the only tool you should use, but they should help. They show the previous day's trading range, the midpoint of that range, and expected price maximum movement for today's trading range. Trading stripes are named because they sort of look like an automobile racing stripe. So why use trading stripes? Well, they're simple for the novice to apply to almost any vendor-supplied trading platform using red, white, and blue colored horizontal lines. They provide a good visual orientation of price movement over yesterday and today. They've been proven to be an effective tool for assisting in short-term trading decisions, and really there are just too many variables, financial, news, environmental, to make any long-term accurate stock trading price movement predictions, especially in today's market. Short-term trading can reduce the risk of capital drawdowns, and really there is only now. Yesterday's gone, tomorrow's not here, who knows what it'll be like. So short-term trading, in my opinion, is the only way to go today. So how do you get started? Well, open an account with an investment firm that provides a stock trading platform if you don't already have one. In this presentation, I'll be using Charles Schwab's Street Smart Edge, which I've been using for several years now for this presentation. I like it a lot, but I'm not recommending any stock trading platform. Become familiar with how to use the draw functions of that platform to add, delete, move, and change colors of horizontal lines on a price chart. Then go ahead and create a live 1-minute price chart for displaying delayed stock price movements. Also create 10, 30, and 60-minute as well as daily, weekly, and monthly price charts for delayed movements over time orientation to give you more of a perspective. Study these charts for at least 90 days before trading any stock. Focusing on no more than 5 stocks or exchange traded funds and learn how they move. And finally, learn how to place a trade using stops, like a stop limit trade. Paper trade if it's available on your platform using a dummy account. This is an example of a 1-minute chart for PDS, Precision Drilling Corporation. The chart shows price movement of PDS in a 1-minute intervals from December 18th through 26, 2017. And we will use this example and apply trading stripes to this chart over the next few slides. To apply trading stripes to a chart, begin by snapping blue horizontal lines to the top and bottom of the previous day's trading day's range, which is to say at the high and low close price for the previous trading day. In this case, the previous trading day was Friday, 12/22/2017, and today is Tuesday, 12/26/2017. So you can see that this can span over a weekend or holiday. After establishing the previous day's trading range, we want to next snap a horizontal white line to the midpoint of the previous day's trading range. Note that this is the midpoint of the range and not the average trading price. An exact point can be calculated by adding the high and low close price from the previous day and dividing by 2. Finally, we want to apply maximum expected movement lines. So what we're going to do is snap a red maximum expected movement line above and below the blue lines, equidistant from the white center line to the blue line, so that you can see that the red line is the same distance from the blue line as the white line is from the blue line above and below. And that's it. You've applied trading stripes to your 1-minute chart. Now sometimes for leverage ETFs with high volatility, I'll add an extreme movement line, which is a second red line above the top red line we just added. You can add a third one, you can even add them below if you would like, but I just generally add one. Now how do we use trading stripes to help us trade? Well, we want to practice, but remember, like my band teacher used to say, that practice does not make perfect. Only perfect practice makes perfect, so you need to practice for a very long time. Apply the trading stripes before the market opens to no more than 5 stocks or ETFs and learn their movements. Look for symbols with good movements so trades will be interesting and worthwhile. If a stock only moves a few cents, you probably don't want to try and use this methodology with it because it won't be worthwhile. Watch the pre-market movement, but do not trade in the pre-market. Pre-market moves can be very misleading and are often where price manipulation occurs during low volumes, resulting in pump and dump trades. In other words, traders are buying and selling to themselves, trying to pump the stock price up, attracting a lot of buyers so they can dump their bad stocks and get out of the market. Wait until after the market opens at 9:30 and then give the market some time to establish its direction. I usually do not trade before 10 o'clock in the morning. Next, you want to look for price movement from under the white center line to above the white center line. It's best to see this occur more than once if possible. In other words, you're bumping along the white center line and then you finally move up at around 10:30. Do not buy below the white center line thinking it's a better deal. It's a loser because it hasn't yet established an upward direction. Place your trade as a stop limit trade within your personal risk tolerances, somewhere below the white line. Typically I use the midpoint between the white line and the blue line below it. I never place a stop lower than the lower blue line. There the trade is almost always a loser if that happens. Consider selling when the price hits the upper blue line, but this is when your trading field comes into play. If the price movement appears strong, let it ride, but watch it closely. Do not let a winner turn into a loser. Strongly consider selling if the price hits the upper red line or approaches it and backs off as shown in the chart below. I'm usually out of the trade by 11:30 as traders close positions during the lunch hour, and I do not trade in the afternoon because there's just not enough time to get back out if you need to. A few more considerations for using trading stripes. Look for stocks with good sideways movement and wide price volatility, which is a favorite of day traders. Make sure the usual price movements that you see in the charts will make the trade worthwhile. Remember, you'll pay trading fees and wait T+3, in other words, a trading day plus 3 days for settlement for your next trading opportunity. Next, look at the stock's movement over the 10, 30, and 60-minute charts, as well as the daily, weekly, and monthly charts you also built. A stock trending upward has a much better success rate than one trending downward for this type of day trading. Know the character of the stock before trading it, not just price movements. In other words, study the business. Know the financials. Never place more than 1/3 of your account balance on one trade, but buy enough shares to support a good profit in the trade. I try to shoot for about 1,000 shares on a trade. Never trade without a stop. Use the stop limit trades. Move the stop and limit up as the price moves up to lock in your gains. Remember that stock trading is a percentage game. Be happy with 1% gain for a day in a single trade, and do not let a winner turn into a loser. Be very cautious about staying in the trade overnight. Anything can and will happen, and usually not in your favor. You'll sleep much better in a cash position. Do not trade while being distracted by work or other activities. Trading is a serious business. There will always be another trade. Develop an attitude that you do not care whether or not you trade that day. This will let you wait for a better setup. Study and learn to use other trading studies and indicators. Trading stripes are not the only thing you should use and are not dead solid perfect if you read that book. Nothing is dead solid perfect. Do not believe in or care about any stock or company because they do not care about you. They're just all lines on a chart. Finally, hope is not a strategy. Cut your losses if you have them and live to fight another day. Thank you for watching this video. I hope you liked it, and I hope you have success in applying it to your trading.